one thing I look at big time is what they call payment shock. Let's assume that somebody comes in here and they're paying $500 or $700 a month rent, and they don't have a lot of money saved. They just barely got the 3.5% to pay down, or they're going to get a gift for their down payment, which means they haven't saved any money, and they're going from say an $800 rent payment or $1,500 rent payment to a $3,000 house payment or a $2,500 house payment with no money saved. They call it payment shock, and I think people ought to really consider that when they're buying a house, what you're currently paying in rent. And if for example, let's say you're 25 years old and you've been paying $800 a month rent, but you've saved up $25,000, as versus the same person, 25 years old, paying $800 a month and saved up $1,500. It's a lot of difference, because you're going from, say, $800 a month in payments to $1,400, $1,500 or more in payments. So you ought to really think about that before you do it. Make sure that payment shock is not going to get you. And let me tell you, underwriters care about that too.
So you could end up house poor.
Absolutely, you could. It depends on discipline. I mean, it's like I said earlier, I know people that can pay a $1,000 house payment and make $1,500 a month and never miss a beat. I know people that make $20,000 a month and can't afford a $1,000 house payment because they got too much outside money going out.